All right, welcome to Talk Tickers. Today, we're going to dive into Harley-Davidson's second quarter 2025 earnings call, and let me tell you, this one was a real head-scratcher. On the surface, the numbers looked pretty rough. Missed targets, sales were down, but the stock market's reaction was, well, explosive. It was a super complex and, honestly, a pivotal moment for this iconic brand, and we're going to break down exactly what went on. So that brings us to the million-dollar question, right? How in the world does a company miss its earnings, report that sales are falling off a cliff, and then watch its stock price rocket up almost 17%? It just doesn't make sense. Or does it? That's the puzzle we're going to solve right now. Okay, so let's just look at the raw data. It's a tale of two completely different stories. On the left, you have the actual report. Earnings per share, a miss, down 8% versus what everyone was expecting. Global sales, down a painful 15% from last year. I mean, by any normal measure, that's a bad quarter. But then, look to the right. The reaction? The stock jumps nearly 17% and the trading volume goes through the roof. So the question is, what did Wall Street see that the headlines completely missed? All right, Section 1. We're calling this the sputtering core business. Before we get to the big surprise, you have to understand the bad news. So let's start with Harley's bread and butter, the motorcycles. And, to be honest, the engine was really struggling. And when I say struggling, I mean it. Just look at these numbers. It wasn't just one thing, it was everything, right across the board. For the motor company itself, revenue was down 23%. Shipments to dealers got slashed by 28%. And that operating margin, that's a key profitability number, it fell off a cliff, down a staggering 88 basis points. I mean, this paints a really clear picture of a business facing some serious problems. So what's going on here? Well, management basically said it's a perfect storm. People are nervous about spending big money on things they don't need, high interest rates are making loans more expensive, and a bunch of global tariff issues are just making everything more complicated. But they aren't just sitting there and taking it. They're hitting back. They're cutting way back on dealer inventory to match demand. They're rolling out a new AI program to find cost savings, and they're tackling those tariff costs head on. Okay, Section 2, unlocking the financial arm. So if the motorcycle business was in such rough shape, where did that 17% stock pop come from? Well, here's the answer. It came from a truly brilliant financial move that was all about unlocking the hidden value inside Harley's other business, its financing division. Now, to really get what they did, you gotta understand this term, capital light. What is that? It's a fancy way of saying a company wants to get assets, in this case, all those motorcycle loans, off its own books. And why would you do that? Simple. It frees up a ton of cash that was just sitting there, it lowers your risk if people stop paying their loans, and it makes the rest of your business look a whole lot more efficient and profitable. So here's exactly how they pulled it off. It's a pretty slick four-step move. First, they teamed up with two absolute heavyweights in the investment world, KKR and PIMCO. Second, they sold each of them a small piece of their financing business. But here's the masterstroke, step 3. They agreed to sell these partners 2/3 of all the new loans they write for the next 5 years. And the result of all that? A massive flood of cash comes pouring back into the company. And how much cash are we talking about? $1.25 billion. That's the number. That's the number that made every investor on Wall Street sit up and pay very close attention. In one move, Harley just freed up over $1 billion that they can now put to work immediately. And they've got a plan for every single dollar, a plan that investors absolutely loved. A huge chunk, $500 million, is going to buy back their own stock, which gives the share price a direct boost. Another $450 million is going to pay down debt, making the company financially stronger. And, crucially, they're still plowing $300 million back into the business for future growth. I mean, it is a textbook case of smart capital management. And you gotta hear what the CEO, Jochen Zeitz, had to say. He basically used this deal to send a crystal clear message to the market. He's saying, look, this deal proves you've all been undervaluing our core business this whole time. By showing how much their financing division was worth, he's making everyone rethink what the part of the company that actually builds the legendary motorcycles is worth. Okay, on to Section 3, a new road ahead. So they've got a stronger balance sheet, a huge pile of cash. So what's next? Well, this big financial pivot is really just the fuel for a whole new strategy to get the core motorcycle business back in growth mode. And it starts with this number, a number you probably never expected to see associated with a new Harley-Davidson, under $6,000. They're launching a brand new bike called the Sprint, and for a premium brand like Harley, this is a massive deal. They are making a direct play to get a whole new generation of riders in the door. Now, the most important word in this quote from the CEO is profitable. See, Harley has tried to make cheaper bikes in the past, and let's just say they weren't exactly cash cows. So for the CEO to come out and say, hey, we figured out how to make this bike both affordable and profitable, well, if they can actually pull that off, it's an absolute game changer for the company. And they're not just betting the farm on the Sprint either. They're launching a full-scale attack here. There's another new entry-level cruiser coming right after it. They're getting back into racing in a big way to generate some buzz. They're even getting a little tailwind from a new tax law that makes it cheaper to finance a bike. And they're totally revamping their LiveWire electric brand to focus on smaller city bikes. It's a multi-pronged attack to get sales humming again. So here are the dates you're going to want to circle on your calendar. A new CEO, Artie Starrs, takes the wheel in October. The new LiveWire electric bikes officially launch in November. And then the really big one, the Sprint motorcycle hits showrooms in the first half of 2026, which is the same year their new racing series kicks off. The next 12 to 18 months are going to be absolutely critical. All right, let's line the plane here. Section 4, the next call, our verdict. We've seen the struggling core business, the brilliant financial pivot, and the big plan for the future. So let's put it all together and give you our take. First things first, here's the proof that management is doing what they said they would do. They promised to get dealer inventory under control, and boy, have they delivered. Just look at how that decline has accelerated, hitting a massive 28% drop in Q2. This shows real discipline, and it's the absolute first step you have to take to get your pricing power back. So this really sets up the classic debate, the bull case versus the bear case. The bulls are hyped. They see the HDF deal unlocking value, the huge buyback supporting the stock, and an exciting new product pipeline. But the bears are pumping the brakes. They're saying, hey, people still aren't buying motorcycles. The economy is shaky, and launching cheap bikes is really, really risky. And you know what? Both sides have some really valid points. So where do we come down on all this? We're rating the stock a market perform. Here's why. The stock already got its huge reward for the financial engineering. Now comes the really hard part. They have to actually execute. We think the new strategy is great, but it's balanced out by the very real challenges they still face. To us, the current stock price seems to fairly capture both the huge potential and the significant risk. But for any of you looking for a more advanced idea, here's a thought. A paired trade. You go long on Harley-Davidson stock, ticker HOG. At the same time, you short another company that also sells expensive fun stuff, like maybe an RV or a boat maker. The theory is that Harley has its own unique story that could help it arise, while the short position protects you in case the whole consumer economy stays weak. It's a way to bet on Harley's specific plan while hedging your bets. And finally, our standard but very important reminder. This is not financial advice. Everything we've covered today is for informational and educational purposes only. Thanks so much for tuning in.